is Monday, June the 13th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the grain markets this morning, Steve, the headlines continue to be traded, creating increased volatility. How much impact does global politics have on grain futures price discovery?
I think it has a lot of impact. I think the fact that the war in Ukraine is reducing the amount of exports out of Ukraine is important. I think that certainly the headlines overnight about China warning U.S. about Taiwan is certainly hurting the soybeans. And then I think that in Washington, inflation, talk of higher interest rates is hurting all markets today. So, $17 beans, $7.60 corn, $10.60 wheat is still historically high. But last week, fund managers decided to liquidate some of their positions because of heavy losses in the financial markets.
And Steve, looking at the latest Midwest weather, what can you tell us about the 2-week and 30-day forecasts?
Well, there's a little bit for everybody. There's some showers that are going to go across the northern Midwest today, and then we'll have 10 days of potentially record heat across, especially the Four Corners, Kansas, the Western Corn Belt, the Delta, and also in the Southeast. Could reach 100-degree temperatures tomorrow in Chicago. But the ridge seems like it's going to move back westerly after the coming weekend, which will bring more normal conditions as far as temps and scattered showers. So I think if I'm a corn plant or a bean plant, overall, this is a forecast that's okay for now.
Steve, we had a USDA grain report late last week. Do you agree with the latest USDA World Supply and Demand report? And if not, why?
No. I mean, I think the USDA is becoming very conservative about reducing exports out of the Black Sea, both wheat and corn and sun oil. I think they're very conservative in their estimates of South American corn production and the ability for them to export. They did raise bean exports a little bit, but they lowered corn exports, which makes no sense at all. So I think that it's kind of a disservice for them not to show some of these changes and maybe increase in U.S. corn exports and further increase in U.S. bean exports. Plus, I mean, there is a lot of weather uncertainty globally with Canada too wet and parts of Europe too dry. Spain has record high temperatures. The Black Sea is dry. All of Argentina is dry, which affects their wheat crop, and Brazil has turned dry. So there's a lot going on as far as global weather is concerned that the USDA has not addressed yet.
Alan, the stock indexes have gotten crushed the past few sessions.
Yes.
What's the next major support for the S&P 500 futures?
So taking a look at the weekly charts, there is the 35.87 to 35.96 level. In fact, we did see the high in September at 35.87 and a low in December at 35.96. So just under 3,600 is the next major support. So really, it's a major high and a major low. So I think that has to be viewed as the next major support for the S&P 500.
Alan, inflation is being cited as the most prominent concern economically. How aggressive will the Federal Reserve be in its effort to limit inflation?
So they're becoming much more aggressive, apparently, and this seems to be ramped up by the Consumer Price Index report that came out on Friday. So now it looks like there are going to be a series of 3 50 basis point hikes in rates, although there still is a possibility that the Fed could raise by 75 basis points at this Wednesday's meeting. So the Fed has become very much more aggressive, and that is likely to be reflected in what Powell's commentary is likely to be at the conclusion of the Wednesday meeting. Also, financial futures now are predicting that the Fed funds rate could get as high as 3.9% by June of next year.
Finally, I'm sticking with the interest rate topic. Why are the portions of the yield curve inverting?
So it's really the 3 out to the 10-year that is inverted. And this is a very clear indication that the economy is slowing. In fact, it was a year ago, May, that the yield curve started to flatten. So there were signs last year that the economy might be a bit weaker coming down the pike. So we're seeing that developing now. Even a lot of the reports have come in on the weak side. Just on Friday, we had the consumer sentiment index falling to its lowest level on record. So while the Fed very clearly is attempting to control the inflation situation, they are going to have a problem down the road of what to do about a weakening U.S. economy.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.